If you're new to real estate investing, you probably have a million questions on how to get started. And aside from getting your financial house in order and getting pre-qualified for a loan, the best way I would recommend beginning your journey is to start looking at single-family homes. Today we're going to discuss why these simple and boring properties can be your best bet for stacking your own houses. Welcome to episode 9 of the Stacking Houses podcast, where we're getting paid not to be afraid. What is up, house stackers? If you're new to the podcast, our mission is to help working professionals create a solid plan B, a side hustle of passive streams of income through real estate investing. I'm your host, Damon Santamaria, and my goal for each show is to provide you with some practical and inspiring information so that you can create a solid financial plan for yourself. So to help you on your journey, I want to give you a free guide on how to house hack. What is house hacking, you ask? Well, it's probably the most cost-effective way into real estate investing by having other people pay for your housing expenses. Curious to find out more? You can pick this up by simply going to stackinghouses.com/house hacking. And while you're there, you can check out our free training on where we're finding great deals in today's landscape. You can check out my blog and a bunch of other cool stuff as well. So with that, let's jump in. So let's start by discussing my favorite type of property, and these are single-family homes. There are multiple reasons why single-family homes make the most sense for me. Number one, it's simply what I'm used to. I grew up in a house and I understand how they work much better than I do a large apartment, a mobile home park, or commercial property. They are simple and they're boring, but they're easy to manage. And if something breaks, it's fairly simple to fix it and move on. My first property was a 3-bedroom, 1.5 bathroom that was 2 minutes down the road from me. I'm not the most handy guy in the world, but there are all sorts of smaller home improvements that I was able to make to help the performance of the property. For instance, I was able to add new carpet, attic insulation, and I also added a shower to the half bath to make it a full bath. And this helped increase my rents and the demand for the property. And for the items that were too big for me to handle, like getting a new roof, it was fairly easy to find multiple companies to provide quotes and begin work immediately. Also, having just one set of tenants was also easier since I was new to being a landlord. And the last piece I'll mention is that I use this first property as sort of a petri dish to find out what works and what didn't work. And it allowed me to figure out that I didn't want to self-manage all my properties, but it gave me some street cred that was needed and able for me to manage my property managers as I began to scale up. The second aspect that I like about single-family homes is the opportunity size and the diversity. Currently, there are an estimated 100 million detached and attached family homes in the U.S. alone versus only 22 million multifamily units. This means that the opportunity size is enormous. So when I hear would-be investors say that there are no good properties left, I just cringe. All you need are a few rental properties to get you started. The other important factor is that the market is extremely fragmented. Over the years, it's been incredibly difficult for Wall Street firms to swoop in and not only acquire a lot of single-family properties all at once, but also manage that many individual properties. And this leaves the door open to investors like you and me. And during the Great Recession, Warren Buffett was asked his opinion on real estate, and he said, if I had a way to buy a few 100,000 single-family homes and a way to manage them, I would load up on them. And this is arguably the greatest investor of all time, practically giving you his endorsement on single-family homes. But as a side note, I will say, this is September 2021, and we are seeing a few larger publicly traded companies like Invitation Homes and American Homes for Rent really start to expand into the market. And what's interesting when we look at the incredible low inventory right now is that these companies are going directly to the builders like Lennar and KB Homes, and they're asking them to build a large bulk of their homes, and in many cases, entire neighborhoods, with the idea of creating a renter's community where all the homes are rentals located in one area. And this could be good and bad for you as the investor. The downside is that this type of supply and demand may keep less new builds from hitting the market, but let's not forget that there is still a market of 100 million single-family homes for you to choose from, and this number is only growing. Let's also not forget the fact that if Wall Street is getting into the rental space, there's a reason, and that reason is that there are great returns in real estate and plenty of deals to go around for you, me, and the big boys on Wall Street. Okay? So moving on, the third main factor that is appealing is the cost. According to the National Association of Realtors, the median sale price for existing homes in the U.S. was roughly $295,000 in June 2020. And it's important to note that this number also takes into account higher cost areas like Hawaii, California, and New York. But if we look at areas where I like to invest, let's say Tennessee, the median cost is about $190,000, which means that you can easily find properties in the 140 to 160 range. So for our example, if we use the middle of the road, $150,000 for a new single-family home, and you put 20% down, then you're into the game for about $30,000 plus closing costs. And $30,000 is much more manageable than to try to take down a $3 million multifamily for your first deal. And I'm not saying to ignore the longer-term goal of building up to a larger deal. I'm simply saying that your first deal is much closer being within reach than some might expect. Now, the final reason I like single-family homes is the geographic diversity. Perhaps you've heard the age-old advice, not putting all your eggs in one basket. Well, I tend to think of my portfolio as kind of like a mutual fund of investments spread out over a large area. And if an area becomes, more challenging, like it did when Atlanta saw huge appreciation several years back, I have the option to sell that property and do what's called a tax-deferred 1031 exchange, which we'll discuss on a future podcast. And I've got the option to acquire another property in another location where the numbers do make sense. And that's exactly what I did with my Atlanta property. I sold it because it had pretty much doubled in value. I took the proceeds, did a 1031, and I put that into another property in Jackson, Mississippi, where this property is cash flowing tremendously. And my mortgage is now much less because I had a much larger down payment on this next property. So this also helps protect you in a down economy when larger employers begin cutting jobs. So this brings me to my next pro tip, which is never invest in an area where there's just one large industry or one employer. And I've seen it time and time again where the local economy is tied to either a factory or a company that employs half the town. And what happens when that employer downsizes or even worse, goes out of business? It takes the whole town with it. And if your tenants are employed by the company or the industry, then it can be lights out for you. Now, for this last point, there is, a prerequisite for investing out of town, and that is having quality property management teams in place managing the property and your tenants. And this concept of investing out of town can be uncomfortable for many people. And it took me a little bit of time to come to terms with the fact that I couldn't just drive over to check in on my tenants and my property because many of my properties are located out of state. And what helped me get more comfortable was the fact that there's so many online tools like Zillow, like Google Maps, the fact that all of the tax and insurance data is online. And, this isn't the 90s. We need to leverage all the tools available to us as investors, including the internet. And I would also helped me get more comfortable with investing out of state were the fact that I went on these property tours to visit the turnkey providers that rehab and manage all of these properties, and they also keep all of the property management in-house after they rehab these properties. So getting to know the owners of these companies and how they operate allowed me to be more familiar with the process of buying out of state. And I will say that, just like anything else, it's not perfect, but what I can say that is over the last few years, I've bought well over 20 properties this way. And I can honestly say that without the strategy of, buying where the locations make the most sense, I wouldn't have been able to scale up at the rate that I did. So this is a really important concept, especially given the fact that we're now in a COVID-driven market where there is not as much supply to meet the demand, and finding great deals that still make sense is becoming more and more difficult. So if you haven't checked out our training, I strongly encourage you to check out our free training where my business partner Jim and I are having incredible luck. And we break down the step-by-step process and these 3 incredible strategies on where you're able to find your next deal. And each strategy is a little bit different. One is a rehab strategy, one is a turnkey strategy, and then the third one is what we call land contracts or contracts for deed. And I love these types of properties. I'll talk more about them on a future podcast, but you can view the training simply by going to stackinghouses.com and clicking on the free training link at the top of the page. So to recap, there are 4 reasons why I love single-family homes. Number 1, they're simple and boring and easy to fix. Many working folks can manage their first property all by themselves. Number 2, the opportunity size consists of over 100 million properties, so there's plenty for you and me and Wall Street firms to choose from, and plenty to go around. The number 3 is the entry point is relatively low, and it's hard to go broke on a smaller deal. And finally, number 4, there is good geographic diversity, so you as the investor can pick the right markets to choose and select where the numbers make the most sense, provided that you have a great property management team in place. So I hope you found the information today on single-family homes interesting and appealing. Please, if you like today's podcast, like and subscribe so that we can reach newer investors just like yourself. And as I mentioned at the beginning of the show, my goal is to give you incredible value, and one way I can do that is by giving you a free guide on how to house hack. And you can simply pick this up by going to stackinghouses.com/house hacking. So go check that out. And until next time, this is Damon with stackinghouses.com, and happy investing to you.